G'day traders, welcome to Markets Morning. It's the 8th of November 2018. We've had one full day's trade in the US after the midterms and stocks fairly roared. They seem to see something that forex traders didn't because US dollar was a little bit weaker over the course of the day. Not substantially so, but quite a bit in real terms when you think about what stocks did. The S&P 500 and the Dow were both up more than 2%. The Nasdaq was up more than 3%, and they closed at 2813 for the S&P, 26,180 for the Dow, and 7,203 for the Nasdaq 100. Europe had a great night too, so that positivity is going to continue into Asia today as well. We saw the SPY up 42 odd points. It looks like it could rip here in Australia today, so keep an eye on that. In terms of currencies, as I say, the Aussie and Kiwi did best. Kiwi, no rate hike this morning from the RBNZ, but a clear signal that its outlook is changing. Maybe I have got too much of a jaundiced view about the RBA and domestic, but I'm still worried about house prices. Anyway, so what do we got? We've got the Aussie up near 73. We've got the Kiwi up near 68. And Euro was up near 115 at one stage last night before pulling back quite substantially. It's made the easy money to 38.2% retracement. We'll talk about that when we look at the charts. Sterling's still benefiting ever so slightly from positivity about Brexit, 130.130. It's probably got another 150 points in it before it even gets to a decent level of resistance around the 133 region. So keep an eye on that. The dollar CAD toing and froing, not really doing too much. A bit of a wide range, but that was largely oil induced. Oil was down again. WTI lost just under 1% at one point last night. It's down at 61.59. We're getting really close to being about done. We heard from OPEC some interesting noises about cutting supply, as I suggested we would. So that's one of the reasons why I'm getting less less bearish as we get closer to these levels. That's about it. Gold is about flat. Silver's down a little bit. Copper was up a little bit. Let's dive straight in. We're going to start with stocks today because they were the big movers last night. So stocks first, then currencies, then commodities. And then we'll have a quick look at Bitcoin, which actually, rallied $100 at one point. Anyway, as you can see here, this is the S&P. Again, anybody that watches my my videos every day or reads my stuff knows how I use the MACD. And that's what we've seen again. I talk about these things. The MACD suggests is really just that momentum has stalled. We're heading into a bit of a reversal. Momentum is the electricity that feeds moves. And once you start to see that momentum wane, well, then the move starts to stall, and then it can reverse and go back the other way, which is what we've seen. So right here and right now, we are at an interesting juncture. 28.23 is where that fractal is over there. Now, I saw one of the people I follow on Twitter. No, it's not the same. On the physical market, this 61.8 is closer to that line there, but it's not as consistent with you when you use future space. But so what does that mean? 28.23 gives way. We could be up near the highs again. So Tom Basso, who I've spoken about previously in these broadcasts, has got half his hedges off. So that makes sense when you pardon me, when you've run this far and this hard. And my normal MACD usage would say that it's going to go further. So 28.23 is the key. If it gets through there, you could get another 110 points out of the S&P. As ridiculous as that sounds, that's what the market wants to do. If we look at the local market, you could see that there too. I've suggested today in Markets Morning that 6059 is where we could head to. Same story, MACD. Maybe this is the world's ugliest head and shoulders too. Shoulder, head, tiny little shoulder, neckline there, it's broken. So that suggests to me 60.59 for our local market. In terms of the DAX, still lagging. 11.7, 11.7, 11.750. A break above 11.7, 11.750, and we can kick higher. 11.850 and we'll really kick higher. We'll be back in the other range. So that's a key level. Again, MACD suggests. Now, these things, these MACDs, that's really just a representation of the spread between two moving averages. In this case, the 15 and the 30, rather than the 12 and the 26. But you can see why. I use 15 and 30 in my in my trading and when I talk to you every day. So what do we got? Get through the 30, which is at 11,650. Then you got 11,750 roughly, and then 11,850. If you can get through there, then you're back at 12,4 or something like that. So we'll keep an eye on the DAX. Just quickly on the Nasdaq because it's the one that really roared. It hasn't yet made back its 61.8. So 7292 in Nasdaq 100 futures terms is the key for it. Moving over to currencies, and the euro, if I can find it, is at, right, let's blow that up so you can get a sense of it. Perfect. Absolutely perfect. Let's blow it back down, and I'll get rid of this blue box because I think you know that there's a range. So tomorrow when we talk about the range, you'll already know that it's still there. Right. Oh, bugger. Right. So let's do that again. What we've got, if I can get it on there, it wasn't 89, it was 99 or something. That's too high. It's supposed to snap. There we go. Oh, that close enough. Right. So 114 sort of 114.95 to 115. Right. So we've managed to pull back to the 38.2%. The MACD would still suggest, but this is the first indication, so you've got to be careful. It's got to get through 114, 115, call it, and might even be 115.20 is the number you've got to look at to get to 116.20. To me, it seems like it is going to head to 116.20. Keep an eye on that. Some volume came in last night, so there was a bit of volume on the offer by the looks of things, given what the price action says. It's very indecisive and somewhat bearish, I beg your pardon. Actual rejection of 115. So keep an eye on that. It's got to get through 115 to kick on. While it can't get through 115, and if you have a look at the 4 hours, you could draw a nice little trend line through there. If it goes down through that 114, call it 15 level, you could see it. You could see it continue to fall. So keep your eye on that for euro. We still haven't got anywhere with Brexit. We're still 95% done and trying to get something sorted, but still waiting for Godot. So we've broken here. We've held above. That's a good sign for sterling. What have we got? We got more toing and froing on just exactly where Brexit is. The Irish Prime Minister said we may not get a deal this month, but that's okay because we can meet again next month, or there's another meeting scheduled for next month. But to let it slip into the new year would be problematic. So, there is still some pressure from the EU, and the EU is largely saying, as we all know, you POMs, what else do you want? Just get it sorted. And that seems to be where we are at the moment. The DUP looks like they might be on the outside, and that does suggest Theresa May is working hard with her Conservative colleagues and with the Commons, I'm sure, to get this done. So will it get done? I don't know, but the market is acting as though it will. If it does, 133.20, 137.20, if that breaks. If it does not, 126.90, 126.60 is where we are headed. So very much headline risk. That's the perfect market to trade options right now. Now you might say to me, yeah, but Greg, volatility is expensive. Well, it is, but upside volatility is still volatility. So if you're wrong, it's going to cost you some money. But if you're right, the upside vol will feed back into the price. And as you run from a 30 delta to a 70 delta, anyway, big news, big excitement. I'm about to set up introducing broker arrangement that will meld with my paid subscription service, and they've got options. And so we'll be talking more about options as we go through, because it is the best way to trade if you are either not very good at managing your stops or a little bit risk averse and are worried about the execution phase. If you say, for example, right, I'm going to put $250 at risk of this trade, or $1,000 or $10,000 or $100,000 at risk on this trade, but you don't want to pull the trigger, you could do it through the option. Use time, theta. Theta is your friend in options. Anyway, obviously they cost more, but anyway, I'll talk about how you trade them more and more as you go through. Aussie dollar. It's got to close above 72.80. Close above 72.80 opens up that 74.40 I've been talking about. Never got my move back to 71.50. This is what often happens. I wish I had bought it. Anyway, so it never happened. We've got that crossover I talked about yesterday. Still looks like it's biased higher. Got to get up through there. On the 4 hours, there are a lot of moves, including sterling, that look like they could roll over. So we've got China trade out today. That could knock the Aussie back. A knock back to 72.46 should, is my short-term moving average, should find support. If that breaks, then it would be 72.15. And if I get a chance to buy it at 72.15, I'll buy it at 72.15 with a stop under that, and then look to re-enter at a lower level if it breaks down. So Chinese data today is going to be really important. Now Kiwi, I've forgotten the CAD. I know. I'll get back to the CAD. Kiwi's gone vertical, which is always a warning. And if you have a look at the 4 hours, that is looking like that's the end of the trend. That's the RBNZ. So what's the RBNZ said? RBNZ has said that it will it's changed its outlook, so it's much more positive. And it still said that the next move in rate hikes isn't for a long time. It's taken away Governor Orr said, yeah, we could still cut, but he doesn't look like that. So that's really interesting. Oh, speaking of cutting and low inflation and all that kind of thing, in Markets Morning today, the written piece, I've put in a link to an ECB article about digitalisation and what impacts it has on the macroeconomy, and ergo through that on monetary policy. Now, given the monetary policy is so important for trading, it's important for stocks, it's important for cycles, so it's important for commodities, it's certainly important for differentials and forex trading and all that kind of stuff. And given that digitalisation is such an important change that we've seen in the global economy over the last 5 years and continuing to see, I would urge you all to read that. Anyway, what have we got? Easy money done. 38.2% has been done. This zone now between 67.80 and 68.50. Remember, it was support, resistance, resistance, resistance is the key. If it can get through there, it can run to 70 cents. It could, potentially, if the US dollar falls out of bed. But I'm not overly excited. You know, this for me is a sell zone with a stop on the other side, as opposed to the zone to get really excited just yet. Dollar CAD is getting a bit messy. I basically should throw that line out. Now, if it was, but you know, this is one of the things. I know people hate some of these, sloped trend lines, because you can do that. Now I've got a new trend line, and hey, it held last night, so I'm going to get rid of it. Right. So what can you see? If you take that off, you can see we've got to get through and hold 131.70. So if we break 131.70. I would go a quarter in. If we hold above 131.70, then I would go the next 0.75. And when I'm saying a quarter and 0.75, I'm talking about what you feel is your natural position, what I feel is my natural position. And for me, that's based on volatility, the average true range, all those kind of things. For you, it might be different, but you can see here that we found support at the slow moving average, the 30 EMA. So it's a bit trapped. It does look like it's rolling. We've got to keep an eye on that. What will the Fed do today? It's the last of the non-live meetings, if I could put it that way. Gold in a range, going nowhere at the moment. If stocks are rallying, gold can't rally. So if stocks have got, if 28.23 does give way in the S&P and rise, then gold is likely to come back at least to 12 to 17 in that $5 zone, and maybe even as low as 1,200. Silver, basically struggling at the moment. If we look at a weekly, you could draw a little trend line there and say it's going to break down, but the MACD doesn't support that on the weeklies. $15 is still very bullish for me as it stands at the moment. That's essentially the range I've drawn it in. I don't know how that line moved, because I think I had it. Where was it? It doesn't matter. But you can see we're basically in a range at the moment. Maybe I did that. Maybe I just took that off and said that's our range when I was thinking about that. So keep an eye on silver. It's just ratcheting up and down. Right, copper, Dr. Copper in a range too. I'm confusing my silver and my copper charts. This is what I did with copper. Beg your pardon, folks. So essentially 284, 264. 286.5, is the level for me that's got a break to get a run on. And then you've got resistance on a long-term basis at 293. So where are we? Copper's going to be the one that reacts. Weak Chinese data today is going to hurt copper, as it'll hurt the Aussie. But there's a lot of bad news baked into the Chinese cake. So if we do get half decent data out of China, that would be good news. Now I'll start with Brent, then go to WTI. So Brent, an update, but a bearish update. with a higher high, but then a rejection. It's getting to the point now, though, where if this was a vertical chart, I'd be saying, heck, folks. And we heard from OPEC last night. I'll get my skates on now. We heard from OPEC last night. Or we heard from sources saying that the Russians and the Saudis want to do a deal. We've got the JMMC, which is possibly going to recommend some cuts. We'll see. President Trump said again today, pardon me, or last night, I should say, that he didn't want to move too aggressively on the Iran sanctions because he does not want to drive oil to $100. But down at 70, which, pardon me, I had 70, 74, then 70. I had 64, then 60. We're getting close. I'm not bearish anymore unless those levels break. Unless 59.76 breaks in WTI and 70.28 breaks in, pardon me, excuse me one sec. I'll be back in a moment. I think I was saying unless 70.28 breaks in Brent and 59.76 breaks in WTI. So I'm not bearish anymore. I would be. You can see here that's where my stop would be. If it gets back above there, if I was still short, I'm not short. I'm just not bearish anymore. I think that we've had our big move. It's been a substantial move. It's been a fast move. And so we are entering the $1 or $2 where it should pull up. If it does not, that tells me a signal, or sends a signal, a very large signal about the outlook for, pardon me, got a frog in my throat today, for oil going forward. And Bitcoin's doing nothing. So 6,500, 56 breaks or 71 breaks, it gets a move on. Anyway, that's it from me. Trade from Japan, China, Germany, France tonight. But the Fed tomorrow morning at 6 o'clock my time, 2 p.m. Washington is the big event. I wouldn't expect too much, because whatever they do today, they can't quite explain. There's no press conference. This is the last one, though. From December, there's a press conference at every meeting, which is a big change from Jerome Powell. So that's it from me. Have a look at your 4 hours. There's plenty of opportunities there. There's lots and lots and lots of trend lines. Once I open the subscription service, the paid subscription service, I'm probably going to put out 16 4-hour charts every morning just to subscribers, so that they can get a quick look on the time zone or the time frame that they're trading in, because I know that I trade longer term, so I don't have to sit at my desk all the time, but a lot of you trade 1 hours and 4 hours and that kind of stuff, and the 4 hour will be a nice, neat addition to our offering. Anyway, have a great day's trade. Back tomorrow. I'll be in Darwin tomorrow, so I'm heading up there tonight. Back Saturday. I've got a presentation I have to make up there. I'll catch you later. Bye for now.